Hello guys, welcome back. So in this video we'll quickly go through an RSI bullish divergence pattern that has kind of come up. I would like to make you understand what this means for Nifty and other major indices. Then we'll talk about why the next 2 days of trading is very important for Nifty. And towards the end I'll show you something very interesting I have noticed regarding volume data for Zaggle Prepaid Ocean Services. Okay, so let's quickly begin. I'll move to screen sharing. So first of all, let me show you the Nifty 50 chart. Okay, look at it very carefully, and I'll explain to you what an RSI bullish divergence means and what is currently visible. See, first let's go to the bottom of the price correction that happened in March to April of 2025. Look at this. The price of the index, Nifty 50 index, went from 22,000 and it made a max low of 21,760. So the price went downwards, right, over a period of time. But if you look at the RSI, the 14-day RSI over here, you will see that the RSI level did not make a new bottom. It in fact went up. So this is what I mean when I tell that this is an RSI bullish divergence. So what is an RSI bullish divergence? Let's read through this. A bullish RSI divergence occurs when an asset's price make a lower low. So the Nifty was making a lower low, right? But the relative strength index forms a higher low. The asset makes a lower low, but the relative strength index makes a higher low. This mismatch between the asset price movement and the RSI movement means that the selling momentum is actually slowing down, signaling that this could potentially be a bottom or a price reversal can be coming soon, right? And when is this generally used? This is generally used when you want to find mid-term lows, mid-term bottoms, and set yourself up for long positions, set your trades up for long positions in the market. See, this particular index, this particular thing, the RSI helps you understanding the amount in which the market is oversold or overbought. So clearly right now the market is moving from oversold position, which is anything RSI below 30, and it's moving upwards, which means that the price is moving down and the RSI is moving up, means that the intensity of selling is coming down, right? So this happened. So when we actually made the lowest low during this price correction phase, the RSI went up, indicating that the market would move up, right? And exactly that happened. Post this, the bottom was made and the market eventually moved up in the upper direction. Similar thing notice here. This is the current state. The RSI made a bottom on this fall in the Nifty on 13 March 2026. After that, the price of the index of Nifty has continuously moved downwards, right? Over a period of time, we've moved from 22,000 to a bottom we've made at around 22,000. But for all of these drops, the RSI, 14-day RSI is actually kept on rising, indicating that though the price is coming down, the selling intensity is going down, which means there's a high probability of a bullish revival of the index. Now, second observation. Why do I feel the next 2 days for the Nifty is very important? Okay, let me show. See, the Nifty broke down on the war news from the start of March, right? War news from the start of March. It completely obliterated the consolidation pattern it was following. It broke the 150-day moving average. It broke the 200 moving average, and it broke down in a pattern. And this pattern, if you look clearly over here, this pattern is called a downward inclined triangle pattern, right? It is a pattern made by forming lower highs and lower lows, right? It's making lower lows and lower highs. This is an extremely bearish pattern. Now, with the support is obviously this line, the resistance is this line. So we've taken support twice over here to form this line, and we've not actually followed this extreme downslope. But on the resistance side, something is very important. So we've tried to break this resistance. Now this was the third attempt we're trying to do. This was the first attempt on 18th March. We could not break through this resistance, right? So the bears gave up. Then again we tried to break through the resistance on 25th March 2026. Again we failed. So the next day again we came down. Now today is the third day when we have tried to break through this resistance and we've closed exactly at the resistance line, right? Now two factors. One, the daily RSI is continuously moving up. Secondly, we are continuously hitting this upper resistance line of this downward angled triangle, indicating that there is some sort of bullishness returning to the market. Why the next 2 days will be very important? Very simple. See, if tomorrow we close, important word is close. If the close price of our index of Nifty 50 goes above the resistance line, then that is a very positive sign, which means that there might be a reversal and we might move way higher. But that needs to come with higher volumes. It needs to come with volumes which is greater than the average volume of, close to 476 million for the last 15 days, 14 days which Nifty is falling, right? Then the next important thing is, even if it breaks up and closes tomorrow on a high day, above this upper trend line, it does not provide a guarantee that the trend will continue. This is because there is always a chance of false breakouts during bear markets. So we will have to see that tomorrow not only the price of our index closes above this upper trend line, upper resistance line, the day after that is on Wednesday also, we will have to be sure that our index closes not only above this line, but even better would be if we close above tomorrow's high, right? If we close above tomorrow's high with increasing volume, so that will indicate 2 days of closing above each other and above this particular resistance lines, indicating and giving us a good amount of confidence that अब तो हम लोग ऊपर जाने वाले हैं, which all of you, even me, everybody, every retailer, every institutional person wants, right? So this is something which is very important. Next एक और चीज, let me show you quickly. So we went through this one. Let's also talk about the Nifty VIX. Okay, the VIX is it's an indicator of the market's volatility. It's a volatility index, and if you notice clearly, the last 1 year VIX, we've generally been in the 10 to 15 zone, which is stable for Indian context. But since this war broke out towards the end of February, start of March, the VIX has been continuously rising, right? It moved from 13 and now the VIX is currently at 25.5. Which means that there's a lot of volatility in the market. People aren't able to predict which direction the market will move. There's a lot of fighting going on between the bulls and the bears, right? So that is also something we need to know. That is why taking leverage position exactly right now with your call or put options, be very careful with it. Don't do that. And look at the VIX. The VIX needs to cool down. If the VIX cools down, the RSI bullish divergence keeps on continuing. And very importantly, if we are able to maintain an RSI of greater than 50, right now we're at 42, over maybe a week of trading, then my bet would be that we have kind of rebounded, at least for the short term. Second thing you guys need to know is, this is a daily chart. Always do a confirmation of RSI on a weekly chart as well. See, when we made the price bottom, at that time there was a confirmation of RSI bullish divergence on the weekly chart as well. Right now we're in the weekly chart, right? If you look at this carefully. But right now we haven't reached any confirmation on the weekly chart. If you look here very carefully, last week the price went down, the RSI also went down with it, right? This week, this has just been one day of trading. The RSI is moving up, that is a good thing, but till the week ends, we won't get the confirmation of whether there has been an RSI bullish divergence on the weekly level. So a few things which you guys need to note: bullish divergence on a daily candle limit. Second, confirmation of 2 closes above the resistance line in the next 2 days with higher volume than the last 5-6 trading days. That is very important. Next, VIX needs to cool down. VIX needs to fall from 25 levels to sub 20 levels over a period of 1 week. If that happens, very good. RSI ultimate, the ultimate RSI value should eventually rise above 50 and sustain there at least for a week to say that something is happening. Okay, look at all of these things. Do this check. I've just shown you a check on Nifty. If I show you a similar check on other indices, like let me take you to the Nifty 250, right? I'll just take you to Nifty 250. If you go to Nifty 250 index, the Nifty small cap 250 index, similar thing, right? RSI divergence when we bottomed up and the market moved up. Then there is another bullish RSI divergence. Right now the market bottomed, the RSI bottomed here, but the price and the market kept on going. So very important, guys, look at all of these patterns, keep your eye out for it, and be careful of taking any leverage bet, specifically when the VIX is in such a bad shape. Now let's quickly move through Zaggle. I won't take much time. Zaggle, if you guys have been following Zaggle for a long time, you know that Zaggle is kind of like the CRM for spend management. Like SAP is the CRM for enterprise, resource planning. Darwin Box is the CRM for human resource management. So Zaggle makes a particular software. It has a lot of products actually. Zaggle Propel, Zaggle Save, Zaggle Zoyer, Zaggle Zatix, a lot of things. But the main idea is spend management. CRM for spend management, and it is basically a B2B company. Okay, and it's also moving into B2C services. It's acquired a lot of companies over the past. It acquired Rio. It has a lot of revenue streams of through which it earns money. One is obviously the B2B SaaS product sales, through which it generates it generates SaaS income. Then there's the program fees. Basically it sells co-branded cards with banks, so it takes a part of the GMV transaction, takes a part of the transaction from the total amount transacted from the bank, which is the take rate. And there's also various other ways in which it earns income. Zaggle used to go up in the bull market in a very zigzag fashion, and from the time we've entered the bear phase, Zaggle has continuously fallen in a downward trending parallel line kind of technical indicator. And the screen, if you look at Zaggle's P ratio, it's absolutely down. If I can show you Zaggle's P ratio right now, you'll see that Zaggle has a P ratio of 23.8, which is like very low for a company which grows at a rate of 40%. Obviously I feel the reason is basically that Zaggle there is no cash flow from operations, but it is a very young company, so initially it is kind of difficult for companies to generate free cash, right? It has to do a lot of investments. It has to buy some companies. If it is doing acquisitions, a lot of its money gets stuck in receivables. So all of these are factors that you need to consider. And recently Zaggle's PE, I was noticing this almost, if you look at Zaggle's PE on 30th March, at that point of time, the PE of Zaggle had abysmally gone down to 20. And this is for a company that used to grow its revenue for, at a rate of 45-50%, profits at even higher rates, 60-70% for good periods of time. So essentially you're looking at a PEG ratio of 0.2, 0.3 for Zaggle. And that has bought in some amount of institutional value buying. So look at this volume. Zaggle's average volume would be around 2.3 million, 3 million. And over the last 2 days, there's been some buyer which has bought almost 30 million shares of Zaggle. Yesterday, their CT, if I'm not right, their CFO resigned, and there's a interim CFO who's filled up the boots. And it's very essential at these points of time to see what happens the next day in trading. And just like that, we've seen there's hardly any panic selling due to CFO resignation, and the volume is absolutely low, indicating it might not be such a issue. So this is what I wanted to point out, right? Zaggle is a company which has a lot of, which is a very different type of company. It can ideally create a new category of spend management. It has a lot of AI enabled agentic structure built into it. It has guided recently for 40% plus revenue growth over the next period of years, and it has right now, after a long time, finally rebounded with a huge institutional buying of 30 million shares. So this is something I wanted you guys to look out. Any potential Zaggle investors, any of you who are kind of following this company, thinking that the price keeps on falling down, what is happening, even if the company is growing. So any amount of massive buying from institution, this is definitely retailers haven't bought 30 million shares, right, over 2 days. The share price literally rocketed by 24% in 2 days. This is something which retailers cannot do. So there is some big party who knows much more about us, and which feels that there is a good value bet on Zaggle at these prices. So maybe it's a great value bet for you also. So look at the prices of Zaggle over the next few days. See if it gives up the entire gain. See if you get better time to entry. This is not a buy or sell recommendation. This is a technical observation for Zaggle investors to look at. For fundamental analysis, obviously you will need to read all about the company. So this is something I just wanted you to show for Zaggle, right? So that is all, guys. I went through 3 things in this short video. First of all, that there is an RSI bullish divergence in the major indices, NIFTY50, NIFTY small cap 50. Then why the next 2 days of trading is very important for NIFTY. Then we went through Zaggle. Then we've understood a little bit about India VIX, what it does. So I feel I'll leave you guys with that, and keep on analyzing and studying the market, and I'll quickly make a video tomorrow covering some other topics. I'll quickly see you back.